There is a substantial risk of loss associated with trading forex, binary options, stocks, or equities, collectively, asset classes. Only risk capital should be used for trading. Trading in any asset classes is not appropriate for everyone. Past performance is not necessarily indicative of future results. No representation is being made that investors will make profits, or will not sustain losses. Before trading in any asset classes, investors should consult with their professional broker, financial advisor, or financial consultant to determine whether trading asset classes is appropriate. Investors who trade in any asset classes should only do so if the capital used for this purpose represents funds that an investor can afford to lose without adversely impacting the investor's lifestyle. No trading strategy or methodology is without risk of loss. No trading strategy is risk-free, and no trading strategy can guarantee profits or freedom from losses. Investors risk losing the cost to execute any transaction, including associated commissions or fees. You should carefully consider whether trading in any asset class is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and at your own risk. None of the statements or materials in the Auvoria Prime chat rooms constitute a solicitation or recommendation to buy or sell.
Also, along with my partner Steve Ruff, we run First Down Financial in Orlando, Florida, where our goal is to educate clients on the nuttiness out there and avoid risk control. So, since I am not feeling so hot today, I figured I'd give you guys a straight shot look at the inside of Investors Business Daily. Now, this is a subscription service. It's about $37 a month. It is worth it if it was $370 a month. These guys, I'm not going to get into it today, but they've got screeners. They have all kinds of stuff. They have a Sunday or a Saturday edition that comes out, has all the charts. This was developed, if you don't know what it was, by William O'Neill, who is still alive. It is amazing to me, by the way. If you do not know who he is, you can Google him. He's one of the market wizards of the last 50 years. Most importantly, in my opinion, he has built what I believe to be one of the most solid databases on this planet for information related to investing. Now, what this is not Morningstar, right? This does not put out star ratings on mutual funds. This is not the Bloomberg database, right? This is not, and those are the other two big ones, at least in my opinion. Thomson Reuters sort of falls into a tertiary level at number 4, but Investors Business Daily has absolutely no fluff. These guys are not owned by anybody. There's nobody pulling the strings at the top. They have, at least in my opinion, once somebody moves outside of, and look, I get it. I understand a lot of young investors, want to be in the crypto and Forex space, but I can tell you this, as I often will say, if you look at the portfolio of anybody really wealthy, okay, and I'm talking about somebody that's 7 figures and up, I don't care about their age. Generally, it is not all Forex and crypto, right? So look at anybody that's super successful. Now, obviously, in the case of many wealthy people, the most of the value of what they own is inside their business, which is publicly traded, right? But if you push that aside, you just take a look at the investments, you will see real estate, right? In many cases, you'll see huge chunks of it in terms of percentage of the portfolio. Real estate's probably about to take a pretty good hit for many of these people. But it comprises a huge chunk. Stocks and bonds next, venture capital, private equity, hedge funds, they all fall into sort of that special space that I call alternatives. In addition to that, they may have holdings in crypto, but at some point in your journey as a investor, you really want to get yourself thinking like an institutional investor, right, or a wealthy individual, or what they call an accredited investor based on SEC terms. Either way, these people have significant wealth in all kinds of areas, right? So if we're just looking at the stock-based wealth, which has taken almost a 30% haircut this year, but it has been on the rise and climb for the last 12 years prior to that, mostly with not much more than about a 10 or 20% correction, with the exception of the first quarter of 2020, right, which came ripping back after that 30% drop in COVID. So that long precursor, the 14 most important things that a stock will share, have in common, before they make a major price advance, has been detailed and is exhaustively brought out by IBD. Okay, it's called CAN-SLIM. And essentially what it does is it helps identify from a multitude of factors, including both fundamental, technical, and market-based analysis. There's a number of drivers, but if you look at over the last 20 years, the winners of U.S. investing championships, there's a whole host of them that are held out there. The top 3 or 4 spots, guys like Mark Minervini, and that have won this consistently, are absolute IBD tribes people. Okay. Now, I don't get compensated by IBD. I have no affiliation to William O'Neill, but I think that it's critical, if I'm going to do the right thing for all of, students, subscribers, AP folks, friends, right, clients, family, friends. It is probably the most pertinent thing I could do is teach you how to be a research-based investor, right? Obviously, most of what I do is rooted in risk management, and the key to any kind of risk management is just taking measured risk shots at stuff via as an investor, right? Not putting all of your eggs in just one basket, right? So not to spend too much time on equities, but I can tell you, for the younger folks, maybe people that do not need maybe a large chunk of wealth they have sitting in cash, we are in the midst of a pretty big correction in equities. Could drop another 20%, right? I've talked about this for a while. It could be off as much as 50, but I can tell you this, at some point in the next year or two, it's going to be a generational opportunity to buy. It's that simple. So you can either take advantage of that. Not saying that's the time right now, right? So if you follow William O'Neill's rules, his number 1 rule is be diversified, obviously. But outside of that, he does not buy anything that has not put in a proper base, right? So essentially what I like to say is, once everything's gotten just slaughtered and everybody's sifting through the ashes, it's still not the time to buy when it's smoldering, right? But as things begin to rebuild, right, and it forms, in some cases, a long sideways trade off of a tight base, the movements up of the top 50 that exhibit all 14 of these items can be absolutely explosive. Okay, so if you look at, and I'm not going to show the list right now, I talked a little bit about these guys, and the problem is the stock is just totally oversold at this, or overbought at this point. But this is just an absolute fabulous example of this. These are almost always stocks that are exhibiting just ridiculously good behavior in the face of just carnage, right? So Shockwave Medical is one of them, okay? This is not a tip. This is not a solicitation to buy. I would not be buying up here. I would just say that for those of you that understand what the Da Vinci robot meant to Intuitive Surgical, I would probably pay close attention to this. So essentially, Shockwave has been absolutely killing it because they figured out how to turn the arterial sclerosis into crust, and it does not stick to the inner walls of your veins and essentially just gets completely absorbed into the body, which is just an absolutely phenomenal technology for something that arguably kills more people on this planet than anything other than cancer, right? So it's not to say you pile all your money in this. I'm not telling you to buy this. Quite frankly, I think it's overextended. But this is a beautiful example of a cup with handle pattern. This is almost textbook in its nuts. Now, keep in mind, Shockwave's just been killing it for only about the last 2 or 3 years. It's very rare. I should say not rare. It's very young in its infancy. This company and its technology should prove to be the absolute crusher it is right now. Could absolutely just slaughter everybody out there with what they have to offer. So, with that in mind, we'll go into all the other stuff too. I just figured I'd just quickly touch on how IBD plays out in the marketplace. So this is a chart of Shockwave Medical. They, with this chart here, you're looking at just a daily chart. Each day represents a single candle, but we had a long and a pretty big decline. This is due to a number of factors the company has in just, sort of getting their feet off the ground, if you will. But we had a, run back, and a lot of people say, well, maybe here's the time to buy. No, not really, because, we're still in the inferno, right? The time to buy, believe it or not, from a purchasing standpoint is when something actually breaks out from a long base, right? So arguably it could be the breakout here, but the true breakout, the cup with handle breakout, these have a significantly high chance of working. Was this doji candle right here? So, because we just absolutely exploded out of this, and this had a lot to do with earnings, obviously. But I think that this company's still got a fair amount to prove in the marketplace. But if they can, get their footing, and just like Intuitive Surgical did, which is my most winning stock I've ever bought the thing at $35 a share in 2004. Because at the time I actually had a number of clients over at University of Pennsylvania Medical Hospital. I would always go over to see some of these surgeons, and they just taken delivery of a Da Vinci bot. And he showed me this thing, and I was just absolutely floored. It's the type of bot that does surgery. You can be in it in any part of the world and conduct surgery anywhere else. So you don't have to get on a plane to fly somewhere. If you're, some super surgeon, you just jump in the helm, if you will, of the bot. You can perform surgery on anybody, anywhere. Da Vinci and Intuitive Surgical was exceptionally smart in how they executed this in the very early days, is because they brought this bot into teaching hospitals. And it was a genius move because they convinced docs to buy this for their hospital. More importantly, everybody completely got trained on it, and in many cases completed their medical degree while using the bot. So what happens when they leave, right? They go into the clinic, let's say Johnny Smith goes into the, the Smith Orthopedic Clinic, and he's like, wait, we can't perform any surgeries. We got to get one of these bots. These things are huge coin, right? About $1 million each. And, it was just practices started buying them, and you can only use Da Vinci's tools. They can only use once during the surgery. So they've created a huge annuity-based revenue stream for themselves just from a tool replacement standpoint. But it's a great story, and I think if Shock plays their cards right, it could plan out to be the same thing. Neither of these are at buy points. I'm just illustrating why it's always important to pay attention. Most of the stuff that I talk about, you don't see this on CNBC. You don't see it on Bloomberg. Nobody's talking about it, right? But IBD brought it up a long time ago, right? Actually caught this as a breakout in IBD in about 2004 with Intuitive Surgical. So, kind of off on a tangent here, but I just wanted to give you guys just a feel for a little base of how research is. The other interesting thing is the big picture I read every day. So, give you guys a little flavor on this. Almost seemed like a commercial for IBD today. Investors got to start reminding the stock market's still in a correction. So you guys may have saw the jobs report came out 263, consensus is 250, but the unemployment rate actually ticked down 2 percentage points, or I should say 0.2 percentage points, and the labor force participation rate dipped. This is what's not talked about right now, right? See that? The participation rate is not that high. So a lot of people are like, we're full employment. No, it's not the case. It's just there's people not participating in the count, right? So it's hard to put a lot of stock in this when the number's right here. So Federal Reserve obviously wants to see some softness in the jobs market, and obviously it's helping these inflation pressures. It's not getting it. So the index has had a huge down day, as I talked about earlier in the week on the rip. It said maybe we're probably in another dead cat bounce, depending on how these NFP numbers came out to be. But, bonds got clobbered. It's actually been the worst year for bonds. And then, IBD always goes into, notice here, Shockwave Medical, by the way. So, and what to do. So, let's go into the news. Let's get back into our old, seems all done it. So Forex Factory, this was last week. Just want to show you guys these numbers. Let's go into next week. Columbus Day is a bank holiday in both Canada and the U.S. Actually, it's not Columbus Day in Canada, right? It's something else. Thanksgiving. Oh, yeah, that's right. I keep forgetting that. It's Thanksgiving in Canada. Oh, it seems like I never read off that Thanksgiving on Monday now. But in any case, it's Columbus Day for us. Banks are closed. Stock market is open. Okay. Remember, that's one of those unique holidays where it's sort of like weird. Why does that matter? Because the markets are not open. There's a lot less volume, and things could be crazier from a risk management standpoint in terms of a lot more volatility on a lot less volume. Okay. So, from the standpoint of anybody that trades anything related to sterling cable, British pound, you've got a lot of craziness going on in that country right now. I think this would be really interesting to see on Tuesday what Governor Bailey has to say. Bank of England. So FMC minutes are coming out next week, 2 p.m. Do be on alert for that. This is the producer price index. Remember, I told you now you're going to be wanting to pay attention to consumer price, right? Both core CPI and the PPI. These all count a lot heavier now than anything. They count heavier than corporate earnings, at least as far as I'm concerned. The Fed's not raising or lowering interest rates based on corporate earnings. It's based on inflation, right? To get us quell one of their mandates. So this is going to be very important news on both Wednesday and Thursday. Don't be trading in front of any of this stuff, and make sure you pay attention to what these results are. Let's take a look at all charts. I'm not going to spend too much time on equities. I want you guys just kind of see what's going on in currency land here. Dollar rallying back up. Why? Because everything else is selling off. It's been that simple. There's the dollar as uncorrelated to every other asset class generally on the planet. Isn't that funny? Dollar goes up, everything else goes down. It's crazy. You can completely see that by just focusing on the dollar here. Up, right? 3 days of up. Arguably had 3 days, or not 3 days, but we had like 3 times that in a pretty heavy hit. But now we're essentially opposite. But credit, all down. Equities, all down. Select groups of core, very important commodity prices, cotton, lumber, right? They're not doing that well in the energy space. See that? Big ticks up in crude. A lot of that has to do with just heating oil. It's just been a rip. I mean, obviously it's the cold season coming up, but it was interesting that we just took. I mean, this is a short barbecue is what this is right here. By the way, I don't know if you guys can see this, but this is a huge resistance point it came up against, and it probably started poking its head above it, and then everybody got margin called out, which creates a rip right past it. It's the easiest to see, but I always love these stories because, from a risk management standpoint, this may not be the easiest to see, but when you have a huge resistance point that has constantly been an area of defense, let's just say, from a short perspective, and you come up against this again, you're really late to the game here if you're now just starting to short a chart that looks like this. Right? I don't really care what it is. You're probably going to get barbecued out of it. So that's why I always joke those early slingshots, right? We essentially gone into a downtrend. We had that first slingshot back up. And again, this can apply to any item that's tradable on a developed market with lots of participation and volume. That first shot back is always your best. It's called a slingshot. You usually want to take the first or second back, depending on your time frame. I'm showing dailies all the time, obviously. We know that most of our traders trade on a much, much smaller time frames, and that's fine. Let's take a look back up. Those trading the indexes, we obviously, the lows have to hold. I would expect us to visit these lows at some point. Do note that the shorts are out there, at least the institutional shorts, especially the shorts like to stir up the pots and fires are crazy. All kinds of rumors ripping through financial media about Credit Suisse, that CDS portfolios, them don't, and they're like, well, they're all about to blow up. It could happen any day now, right? So this just creates panic, right? What happens in panic, right? Everybody heads for the exits. So don't get caught up in that mania, right? In terms of the banking system, it's not to say we can't get hammered, but they're in nowhere near the rotten shape they were coming into the end of 2007, right? And a lot of people will just point to the leverage. Yes, but there's a lot more backstopping now, even though the leverage is still pretty high, right? Doesn't mean that this market can't just absolutely crash through these lows and go ripping on down, because you got a Fed that is just absolutely hell-bent on backward, in my opinion, fairly useless data to base their interest rate movements on. Obviously, if the market caught a whiff that the Fed was stopped raising rates as of right now, we'd probably rip right back up to this 4,000 area pretty quickly. And that's, I don't know, maybe that's a pipe dream for those that want to get long this market, but the concern I have is that they're going to overdo it, and they'll take an inflationary market and put it into a deflationary. It's very bad. Just remember that. So, not really much to talk about in currency land. As the dollar continues to go up, everything else goes down, generally, in the majors. I'll talk a lot about, strategy in the minors because, honestly, you're playing in the new frontier. I prefer to play in developed markets with lots of liquidity. Everything else, it's just the open frontier, the log cabin phase, as we called it. Euro daily, I'm not going to go through these. If I see anything crazy as I start clicking on down, I'll let you guys know. As I've talked many times before, once you have a reactionary move, I really didn't spend enough time looking to see if this was a complete auction at the bottom. But oftentimes you will visit the scene of the crime. This would not surprise me if we went back down here again. I think that would surprise a lot of people that try to backstop this, including the Bank of England. But it wouldn't surprise me if we went back down here and touched the bottom. Be prepared for that. But remember, Stevie can always be wrong. US dollar, strong obviously versus the Canadian. This is dollar yen, dollar franc. This is the opposites. This is the Australian versus US dollar. I don't know that we took a look at a monthly chart on this. It's okay, so we've actually been here before in this particular case. Let's see. We're looking at the whole time frame. So notice we've been lower during COVID, but that was like a reactionary low. It's a pretty big movement last week, by the way. These are monthly charts. So here is the low last 2 decades. Notice we blew through it on a crazy day, but in terms of constructive chart patterns, this whole essentially 0.6. This area is going to be big. I'd be interested to see if this holds. There was a generational breakout of that area in late 2003, as you can see. We have not been back there yet. So I would expect, as we saw a pretty heavy defense in this area here before, we'll probably see it again. Who knows where that defense comes from? It could come from the Australian bank for all we know. Continued pain for the Japanese in all respects. Euro GBP. GBP CAD. Again, we're looking at monthlies. Let's drop to the daily on this. Set the scale. If we go back down and touch the bottom on that British pound chart, we'll be seeing this area again. Back to the scene of the crime. Spot gold. This was the edge of the cliff right here. Actually, no. Let me just get rid of the noise. This is the edge of the cliff right here. And we didn't trade much under this. I figured there'd be like a watershed moment as we blew through this. A lot of those holding on for this is like the final stop, right? This is like your cliff hang. But we didn't really tick much underneath. It just came right back. Now we're testing the area again. Showed you guys the pain trade and oil. Let's look at crypto. I'm not talking crypto this week. I saw in the financial media, and it's always let this be. You know, my kids always joke, "Oh no, here comes Dad again with another teachable lesson." Right? But trust me, they're going to be thankful I dumped all this crap on them when they were teenagers and nobody told me, right? But teachable moment here. Most of what I see in crypto land, forget about technical analysis, whether it's going up or down or whatever, is the simple fact that the hold on for dear lifers, they cling to the type of research that is just, it's like kindergarten research, right? Now, I don't mean it's to offend anybody, honestly. It's just strictly a risk management exercise. But when you spend the majority of your time saying things like, well, you know, there's been 4 times that this cryptocurrency's gone up a whole bunch and then corrected 83% of the time, right? It's a different frontier. It warrants different types of analysis, right? But most of the HODLers out there, they have no risk management in how they present this on Twitter or, you know, if they're talking on blogs. And you notice a lot of these knuckleheads never get invited on, you know, any of the financial channels because most of them are just spewing garbage, right? If you've ever been to any of these crypto conferences, it's like going to Comic-Con. I mean, hey, look, I get it. There's probably people out there listening to this. They're like, Steve, you know, don't be ripping on us. But I mean, it's like a convention of whack jobs, right? Institutional investors and wealthy people don't take this group seriously. At some point, when they do, then you hear me talk more about it, right? It hasn't gotten there yet. And I have no idea if it'll get there and what type of. I just don't see it talked about, right? Unless you're paying attention to all these starry-eyed folk on Twitter, which unfortunately I try to get them out, but somebody is inevitably always retweeting one, and I just get stuck reading it, which is probably good because it helps me get a good feel for this group. But you never would ever want to have like 3 or 4 of your friends say something like, "Oh yeah, you should invest like $10,000 in it." Yeah, it doesn't matter if it just goes down to $2,000, right? It'll go back up to like 50, right? That's just, I mean, it just goes against every fundamental fiber of my being, right? So if you're okay with that, fine. But I will challenge you to just have that be the case with some of your money. Please don't have that be the case with $1 million of your dollars, right? Because I can promise you, it will give you health problems and it will cause major rifts in most of your life, including your marriage. So be wise, be wise. I think that's everything I wanted to cover this weekend. I will wish you all the ability to think smart before you invest your hard-earned or inherited dollars into areas that can potentially clobber you. Okay? Be smart, stay diversified. As always, if you got any questions on anything, maybe we'll delve a little bit more. I had a whole bunch of people were asking me IBD stuff for last year, and I figured, I'll just show the site. Maybe I'll show their screener next time. It's actually exceptionally good. But it really is just could be as simple as you guys just picking up the newspaper, which is only published on Saturday. It's not the easiest to find, but if you go to a big newsstand, you'll usually find it, or in an airport. Wishing everybody a great week. I recommend lots of sunshine, friends, and love of the family.